As you know, we record every meeting and we send it out on our Thursday newsletter for those who could not attend. So, you know, I was going to say I had a couple of jokes lined up, but I'm going to have to let them go because Julian's not in the back of the room anymore. I was going to say, you know, what a great looking crowd. And then I was going to tell Julian to put the mirror down so I can't see myself anymore. Anyway, obviously we know that you have we have a choice on what you do on Tuesday night. We're absolutely thrilled that you came and spent it with us. We've got some exciting information to share with you. We have some special guests. So before we start, I'm going to introduce the team. For those of you who don't know, Julian Alexander, right here, the guy in the psychedelic tie, looking sharp over there, making me look bad. Julian's our head of investor relations, underwriter, you name it, special project manager, whatever is needed is what we have. We have one job description around here. Does anybody know what it is? WIT, whatever it takes. Absolutely, whatever it takes. So if you need to go plunge a toilet, go get the toilet plunged. If we need to write a script, let's write a script. The guy with the camera up here is Darwin German. Those of you who don't know Darwin, his name's on the building. Name's on my shirt. Name's on my name tag. So thank you, Darwin, for joining us. Garrett Stroud, leaning against the wall. Many of you know Garrett, also on our investor relations team. And the guy that makes all of us look better and sound better, behind the scenes is Muhammad. You can see him back there at the door, Muhammad El-Mala, back making sure that all of the internal mechanisms are working correctly and that everything works without internet. So anyway, it is what it is.
Whatever's within our control.
Whatever's within our control. I've already briefed them that this is the second time in 3 months. We've been back. This is our third live meeting back since February of 2020. And the second time that the power's gone out about an hour before the meeting. I don't mean just power in the building. The whole neighborhood goes out of power. So I'm not sure. I'm going to call TXU, see what we can do about that. Anyway, thank you for joining us tonight. We do have some really nice information to share. So I'm going to go through the agenda, and we'll talk about what we're doing here. The only reason I'm not going to introduce Ben and Anand right now as part of the team, which they absolutely are, is because you're going to get to meet them up close and personal here in a little bit in the co-sponsor panel. So the first thing we're going to do tonight is the DGRA co-sponsor panel, and I'm not going to go into a lot of detail because I'm going to let Julian describe what that is, but Anand and Ben, thank you for being here. We had one other guest lined up, but he had some plumbing issues from the weather. Roofing issues, and can't make it. We do have, we're going to let, from time to time, we do let Darwin come up on stage. So we're going to let Darwin come up tonight, and he's going to be talking about some exciting announcements and current opportunities. That's all I'm going to say about that. Okay, I'll let Darwin get into that. Then we're going to have a Q&A. Anything you want to talk about, we'll be glad to talk about. I would like just a quick show of hands for those of you, if this is your first time here to a Darwin German real estate meeting. I see a couple of new faces that I don't recognize. Otherwise, I would know. I'm just curious, do you guys come together? Or just end up together? Okay. Well, welcome. We're glad you're here, and we'd love to get a chance to meet you before you leave this evening, so please introduce yourself to me, or Julian, or Garrett, or Darwin. Okay, you've been online before? Okay, great. Well, we're glad to be able to put a face to a name. So, again, we'd love to shake your hand and welcome you here. So, without further ado, hello, Nelson. I didn't see you back there. Without further ado, I'm going to introduce Julian Alexander, and he's going to come up and talk about our co-sponsor panel. Thank you.
You're going to introduce me? You already did introduce me. I'm
going to turn it over to you.
All right. Hey, everybody. You know, what I like about getting in front of the group is that I've got this one. And this. Yeah, I've got a lapel mic. Is that I feel like I'm with family, you know, because I look around and see faces I've known for years, and there would have been even a lot more if the weather hadn't shown up the way it did. But, you know, some people have a fear or reluctance to speak in public. Not me, especially if it's with people that I know. So I'm glad to see all of you guys. I see Ganesh up here, and, you know, he's the one that said that he has been attending online. So, but we met actually at the property at Frankfurt Station, and there are now investors with us collectively in Frankfurt Station. So we must have said something they liked. I don't think it was the property, right? Couldn't have been the property. Just Julian, he says. But I did want to, excuse me, ask a question, and that is, just about everybody here, with certain exceptions, has been in the real estate business on a passive level. Have any of you decided at some point in time, or thought about at some point in time, that you'd like to be a Darwin, which means a co-sponsor, a sponsor, someone who's actually driving the bus? Anybody? I know Brian has it at some point in time, Kip, Travis. I bring that up because if you've been in it for some time, and unless you just have an aversion to doing this, you would have thought about it at least once or twice. And the question that always comes to mind is, if someone were to say, I've always wanted to be a sponsor, and that is, why? And it's not a negative thing. Why would you want to be a sponsor? And the answer sometimes, believe it or not, surprisingly, is, well, I'm not sure. I just think it'd be fun. It'd be interesting and different. Well, let me tell you, Darwin, is it fun being a deal sponsor?
It's a heck of a lot of fun and a whole lot of work.
A whole lot of work and a whole lot of responsibility, right? Yeah, exactly. Well, a co-sponsor is a person who heads up these projects, and therefore it has also with it some heavy responsibilities. But it also has some qualifications. To be a co-sponsor, you have to have a pretty decent amount of contacts that you can draw upon to bring capital into your deals. And so what I wanted to say, if you do consider at some point in time, think first about how big your sphere of influence is. If you've got a good sphere of influence, then you would be, in my opinion, in a much better position to become a sponsor of one of these multifamily syndications. Otherwise, you're really, you have the desire, but you don't really have the capability. Like having the bus to drive, but no gas in it, okay? Well, when people do come to me, that's one of the first things I want to know is, do they feel like they could garner enough interest from their friends? And I am fortunate to have two gentlemen here this evening who, I won't say passed the test, but they qualified based on certain criteria. And so I'm going to bring Ben up, and I'm going to bring Anand up. I always have this problem. Come on in, up. I've always called him Anand, and Brian calls him Anand. So, Anand, which is it?
Anand.
Anand. So from now on, what's it going to be?
Anand.
And what's your name?
Ben.
Ben. And how do you spell that?
B-E-N.
B-E-N. So both these gentlemen are part of our co-sponsor program, and we have your picture and your name behind you, but what we don't know is a couple of things. One, if you will introduce yourself just briefly, don't give me this long, well, I went to such and such elementary school, all right, just briefly, and then if you'll tell me why you wanted to get into an active role or a sponsorship role with us.
Yep. My name's Ben Mandelstein, so I'm from Austin, Texas. Originally got involved in real estate in about 2017 when I bought my first fourplex. Can you hear me a little better? Okay. So I knew I wanted to go at a bigger scale and eventually get into apartments. It was just a matter of what that path looked like. I first reached out to Darwin after listening to a podcast where he was talking about Villa Creek actually getting hit by a tornado, which I thought was really interesting. So I reached out to him. He told me about the co-sponsor program about 2 years ago. And then from that point on, I knew I wanted to do it, but it was just kind of building the network, as Julian talked about, and really kind of trying to assess what it would take to get that done. So, I was thrilled to have the opportunity. I looked at other options out there, other education. There's nothing like this. So for me, I knew I wanted to go into apartments. This seemed like the perfect opportunity. It's been an awesome experience so far.
Anand?
Yeah. My name is Anand Upadhyay. I was the passive investor for almost like 4 or 5 years. So for me, this is a natural progression to be a co-sponsor. As an investor, I guess we just don't know. I guess we focus only on distribution and when does it sell for capital gain, and that's pretty much it. By going in the back side of it, how the value is created, that really helped me realize, not only make me better investor, but also open up my eyes that it's a team sport. That a lot of people behind the scenes working on it. One of the webinar I've attended with Darwin, I guess, and he was saying that this is how the value is created, and poof, it's a magic. But behind that magic, there's a lot of hard work goes into it. Each dollar of expense cut and income raised, it's a lot of creative thinking behind it. So it's just really intrigued me, and I'm looking forward to even more.
And you said you were a passive investor for some years beforehand.
Yes.
What was your career prior to this?
Oh, I was a nurse for 20 years on a stroke and a cardiac unit. I enjoyed it. I still miss it, but this is definitely a new challenge for me.
So you were always used to working under pressure, lots of responsibility, and
Yes,
I would
but-
imagine in a leadership role.
But this is definitely different kind of pressure. When
Well, good.
when you're managing somebody else's money, it's an awesome responsibility.
It absolutely is.
So it's just like being a good financial steward. I lost sleep over like COVID because we bought the property before COVID, and since COVID hit and all this transition went through, but it was a great journey. A lot of things to learn.
So tell the group, how long have you been in your position now?
As an asset manager, October 2019, when we acquired the property, Southwest Apartment. But prior to that, I guess I was in 11 or 12 deals.
About a year and a half in
Year and a half.
in the,
Yeah, almost 18 months.
and where do you feel you are now compared to day one?
Property is stabilized.
Well, I'm sorry.
sorry.
No, that's okay. I should have been a little more succinct. Where do you feel personally you
Oh.
are, and how has it affected you?
Oh, it
as-
changed me for everything. As I said, I feel comfortable going into another deal by myself or with the help of Julian. There is a lot of things that I as learned is like before acquisition, you make the projections and predictions. This is what we're trying to perform. But once you actually acquire the deal, it just totally changes the business plan. My deal was like basically was like a weekly and all those things. We changed the business plan, changed the capex, and all those. So I feel much more comfortable going forward.
You feel you've grown quite a bit.
Yes.
And so you also work with Brian on a weekly basis?
Yes, I come to all the managers' meeting. I don't miss it. That's the thing. Even though like most co-sponsored program, the other sponsor has it, that basically just raise the capital and just you go on a sideways. Here we can bring our own individualities as well. I can get as much involved as I wanted to in this deal, which I have plenty of time to do it, and I do it. And I come to all the meetings, learn from them. They have a huge amount of experience, and I learn from it.
Excellent.
So-
Ben, how about you? How's it been for you? You're in the role now 3 months, 2 months?
Yeah, just been about 2 months. So for me, the big transition, I think, is I've done a lot of rehab on smaller properties. But I think using other people, my other investors' money, as well as I'm invested, but just being very diligent when looking at capex and making sure every dollar of capex we're putting in the right place. Whereas with my own personal properties, I do the best job I can, but it's different when you're accountable for other investors. So I think that's been a big thing I've learned. As well as just like the Rolodex of contacts that DGRE has developed.
Wait a minute. Did he just use the word Rolodex? I mean, how old are you?
28.
Have you ever seen a Rolodex?
I have.
Okay.
But just the amount of connections they have. For instance, we had a landscaping company that I think was charging us about $29,000. They weren't even doing a full job. There's stuff that our maintenance guy on site was left, kind of cleaning up behind them. And due to the connections that Brian has developed, we were able to save $7,000. And he knew that, we should be paying X amount. So that's the type of knowledge. For me, if I was getting into the business by myself, it would be really hard to develop that kind of tribal knowledge. So having that on my side, like I kind of know what I've seen in my space with like duplexes and fourplexes from what I've done historically. But I think graduating to the next level, having the direction of Brian, Darwin, Julian, it's been amazing just to have experts that I can learn from quickly And I think Julian talked about it a lot, but really leapfrogging my experience. So instead of growing organically, slowly, I'm able to see what's worked for them and try to learn from that in a much faster manner.
I'm always reminded of the fact that when I first met Darwin and got an understanding of where he came from, he was mentored and he was taken under somebody's tutelage, and what he's doing now is paying it forward, because truly, guys, there's nothing like this out here. It is a program that, like Ben said, will flatten out a lot of the learning curve and take you from point A to point Z much quicker than it would take years for these gentlemen to learn what it takes to become a sponsor of a deal of any scale, much less something like what you did, which is, I think, what was the total budget on that deal?
It was a $10.3 million purchase. Total budget was 11.8.
Yeah, no offense, but at 28, how many 28-year-olds get an opportunity to do a deal of that scale? And so therefore, it's all to the credit given to Darwin for what he was willing to do. And there are plenty of programs out there that will teach you how to do real estate, but they'll also teach you how to write a check to them in order to do so. But they won't do what we do in terms of true co-sponsoring, where they will go to the bank with you. They will teach you all of the ins and outs of doing this. And so therefore, for them, I can just see what they're going to be like 2, 3, 4 years down the road. And it may not be with us, right? It may be somewhere else. It might be on your own. Like Anand said, hey, I feel like I can go out and do this on my own now. But it's life-changing, transformative, right? So a question I would have is, did you feel like, before you got into this, did you feel that you were getting into bricks and sticks, and then when you got into it, you realized you were really working with people's lives? Because this is their homes, and you have a major impact in their everyday life, and then also the responsibility you have to the, I would say the responsibility you have to the passive investors was a little more evident to you. But once you're on property and you see that this is where people live and how responsible you are for them, was that a surprise for you?
I think for me, just the level of quality of life in these apartments is very nice. As some of our properties are in maybe slightly rougher areas, and we don't have on-site management that's there all the time. So for me, I think I'm honored that that's the community that us investors represent. I was amazed at, like, wow, we're able to get 80s build property in great condition. So for me, I think it's a really nice place to live. I can even see if me and my wife lived in Waco, I would be happy living at that. So
Anand, how about you?
Yeah, I agree as well. My property is like a 60s property. When we took over, it was literally a shoebox management. The day we were closing, the manager was a sister of a prior owner, and she was living in the next door unit. And she was shredding the receipts from the shoebox when we were closing the deal. She has a pencil and paper kind of ledger, very mediocre Excel spreadsheet. And moving on from there to advanced tech software or the rent software is a huge leap. And as far as the CapEx goes, we just recently finished a parking lot. And everything we have done, most of the tenants didn't like it, is only because they were not paying the rent. Otherwise, everybody really enjoying the property and the quality of life we are providing.
I would imagine for Ben, only having been in it for 3 months or so, you probably have seen, it's not always great, is it? I always say people come into a leasing office for two things: one, to rent an apartment, or to complain.
Right.
Right?
Mm-hmm.
And so was that something that you were prepared for, or did it take you by surprise?
Everything took me by surprise. This is my first time, never done any real estate before this. Went through a investor club, and Julian was my mentor at the time. And in fact, he was the one who took the multifamily class for me. So I learned everything from 2014 onward. So for me, everything was eye-opener, from closing, submitting LOI. And this deal itself was personal to me in a way that everything was thrown at us that was not projected, from COVID to the fire. after submitting LOI, closing got delayed, and we have 1/3 of the investors who are brand new. They have never invested in any of the properties before. So learning curve for them, I guess, you have to steepen up. And for me, I guess learning curve was even steeper. So it's a great opportunity.
Well, great. I'm glad that because I know what it would be for, because I've been around long enough, I know what it would be for somebody who has come from understanding how you can make money in real estate to actually being the one who's responsible for making that money for the investors and for yourself.
Yep.
And it's going to be, well, it already has been for you, and I know for you, life-changing. So again, I go back, if you've ever thought about doing it, certainly come talk to us, and we will have a discussion, and a realistic discussion as to what the feasibility is for you to get involved. And we're not going to make you feel uncomfortable. We'll do whatever, and that whatever questions you have, I'll answer them. And then if it's the right move, then we'll take it to the next step. Any questions for them? I'll take about 1 or 2 questions, and then we'll move on.
What was the biggest surprise you saw? What surprised you the most? What are the top 2 or 3 things in it?
I think how to manage the capex. The negotiating part was the hardest for me, and we were working with very tight capex. So dealing with the people or the tenant side of it, and dealing with the vendor, that was not the skill I was used to. Having patient and nurses relationship is different. This is like a whole different ball game. So it just that was the hardest part, and it was challenging.
How about you, Ben?
I guess I had an assumption that anyone who owned like 100 units was using all the professional systems that Darwin and his team use. So some of the low-hanging fruit, like not charging back for water and cable usage, having signs out on the property, like some of those things, I just figured anyone who owns a building that big would know better than that. So it's awesome to see those things that we can take advantage of and help our investors out. So I think just really looking at every element of kind of where we're at and what can we do to improve the property. And then I think that it's been surprising, just the negotiation, working with different contractors is a different scale than I've been used to before. So I find it really interesting.
Would you feel comfortable recommending this approach to someone?
Absolutely. I think that anyone who wants to get into being a sponsor, like for me, I know when going out to my friends and family, like they weren't investing in me as the one who's running the deal. They're investing as Darwin, who's had a very good track record. So I think having that confidence behind me gave me the confidence going out and talking to friends and family, as well as just feeling good that I have a great team of professionals I can trust, I can learn from. It's just a really good, I think, synergy between me working with them, going out to my friends and family, and sharing my love for real estate. I love this, and most of my investors had never invested in any kind of real estate before, so it was fun teaching them about it, teaching them how we've tried. We've done a flip, we've done Airbnb, we have rentals, but telling them why I think apartments is really the place to be. So I really enjoyed that process, and it's been awesome having the support of Darwin and his team.
Well, good.
And if anybody else interested in this one, even in thinking about it, just come on by, call me, talk to me. I will show you my property before and after. I have the pictures, all the rehab. I will open up my books for anybody to look at it. I think it's a fun journey to take, definitely.
What does your day look like now? What do you do every day?
Every day I open up my the rent software, look at the expense line by line, every invoices that comes through it, any expense. I think I'm micromanaging and I'm spending too much time than I need to. So I think I need to back off a little bit. But I would consider once the 1/3 unit our rehab is pending, once that gets done, property will be stabilized, then I will move on to next one. But till then, I'm obligated to perform at that level.
Okay.
What does your day look like? What do you normally do?
I'd say, so both me and my wife, our families are in Austin, so whenever we drive through, we try to stop at the property, but then on a daily basis, going into Resman and seeing all the different line items, if there's things I'm unsure about, reaching out to Brian. Again, I'm still just done 2 months. I'm learning a lot. Look forward to continuing to learn. And yeah, every time we can get to the property, trying to get out there and seeing all the improvements we've made.
But I think what Darwin is asking is, I guess, we can spend as much time we want to on the property, and we can be as much hands-off we wanted to. It's up to us to decide. The more people want to learn more, I guess, they can micromanage and do things and all those things, negotiate each contract and all those things. Otherwise, the team is entirely capable of handling the property once the capital is raised and things get done.
Susan, you had a question?
What about, well, two-part question. Have you had any problems with your investors, and have you had any major problem with a tenant?
Okay,
Yeah.
I'm going to say, so for those that are listening online, two-part question. Have you had any problems with any of your investors and or with tenants?
I will start with the investors first. That's the one we raised the capital from. And as I said, some of them are new investors. And whatever projection we have made in the PPM, that this is what we'll perform. And when you don't live up to that one because of COVID and all those things, it's very hard for them to understand. Mm-hmm. So we have to show them how the value is created, even the distribution is not started, but we are on our way either by reducing the expense or by increasing the income $10,000 a month of a NOI, and that will create the value of almost $2 million by end of this year. So just because distribution is not given in last 15 months because of COVID, because we want to sit on a cash and spend the CapEx very gradually, so that way we can only focus on a need-based CapEx and not my wish list. So those kind of learning part involving that one, and once they understand, they buy into it, and that's much easy part of it. And tenant basically, once the quality of life and you see all the rehab that's done, painting inside, outside, flooring, it's a full rehab was done because that 63's property has not received any rehab since it was started. So even the city inspector comes by and they said, okay, this is a nice looking property. We got the highest level as far as category-wise inspection. So it kind of really helps with the city as well. So it's everybody appreciating what we're doing.
And I'm still very new, so I haven't had any real issues with investors yet. I thought it was really interesting working with my investors on using IRA, the self-directed IRA. So many of them were new to that process, so educating, working with them made me realize how good Quest is when I worked with some other self-directed IRAs. But yeah, no real tenant issue. We had a very minor fire that I think we talked about. We got that taken care of. So look forward to having challenges to solve, but at this point, nothing major.
Still early on.
Yeah.
Well, we believe in what we do here. I know Darwin does, and Brian and I do, and everybody here on staff. So we like to get the word out, and this is a great way to get the word out. And again, anybody who is interested, feel free to reach out to me, either text, call, or hit me on email, and let's chat. Brian, I think we're going to wrap this up for the sake of time, and I guess if there are no more questions, well, you know what? I'm not going to take any more questions. It's going to get late. So I'm going to bring on the founder of this company.
Thank you.
What's your name?
Sam.
Sam. I'm bringing on Darwin German.
Oh, great. I don't even know what's next. I'm not mic'd.
Or you want the lapel mic?
It's okay. I will do this. And we're also, no, I'll just use this. It's okay. And because of our internet problem, we're actually on my iPad. So there are people online there. So first thing, Frankfurt. Who's invested in Frankfurt? All right, closing on Friday. That is the plan, closing on Friday. And our occupancy when we took over management was what percentage? 38%. What will it be on closing?
74 at closing, but trending at 80 at the end of April, at the end of May.
At the end of May, 80%. Now, that's why we revised our numbers. We had originally projected, I don't know, 19%, something like that. But I put in there, like I said, we try and be conservative on our lease up time frame, et cetera. And they had said that they can do 10 to 20 leases a week. And I said, no, I'm not going to make that commitment. Under promise, over deliver is what we shoot for. It doesn't always work out that way. But as they started leasing, I revised those numbers, which made the numbers look a lot better. So like I said, our projections are 28% per year average return because we do not have that negative cash flow for the first bunch of the, for the first 8 months like I had projected, because I had 8 months to get us up to the occupancy they're going to get probably by the end of May. So that one's great. So Frankfurt's closing. Yay. Oh, you do? Okay, next one. Anybody in Villa Creek? Villa Creek, a lot of Villa Creek partners. Okay. Just so that you can look at that, it should be okay, right? Any before pictures? Just think of something really ugly, and that's the before pictures. So we are going to have an average close to 50% per year average return on Villa Creek. Okay, so again, a home run. We actually bought this one. One of the reasons why we liked this is because it was a land play also, because it's at 635 and 35. And we fixed that one up. We've been doing great. The manager there did a great job. And just to give you an idea, we've already given out a huge amount of returns because we also did a refinance, cash out refi. But in that one, $100,000 investor, yeah, I'm cheating back there because it's on the wall. $100,000 investor is still going to get $253,000 at closing, and they've already been getting a ton of cash flow and a refinance in there. So a home run there. Now they're not all home runs. Some are base hits, but we're doing good on this one. We'll do good on the next one. Next up, The Crossing. Okay. Has anybody heard the story of The Crossing? Okay. Real Reader's Digest version. The Crossing was the first property that I ever did a syndication on. Okay. I went to, like many of you heard of Lifestyles, I went to Lifestyles and they talked about syndication and I didn't know anything about it. I thought, I wonder if I can do that. So I went out and I syndicated this deal. I found the deal, syndicated it, and said, oh, that makes sense. Now we'll join. So I do things backwards. I learned by doing. And so went out and syndicated that deal. I had to raise $1 million. And on how much did you raise? 1.95. How much did you raise? 1.6. Okay. I was terrified, absolutely terrified. I put up $50,000 non-refundable. This was 2008. Okay. Right as the crash started. And so I said, okay, I can do this. I've got to raise $1 million. And I started to freak out a little bit, but I thought, you know what? I can do that. So that's 10 people with $100,000 apiece. And so that's how I got my start, is going out there really scaring myself and doing that. And I didn't have the support like you guys do, and had to feel my way through that. But I did that one, and we owned that from 2008 till about 2014, maybe. Somewhere, exact dates are beyond me right this second. But there was still so much meat on the bone at that time. I thought, let's re-syndicate it. Let's recapitalize this. We'll do a new deal with a new syndication. Our previous investors can make a whole lot of money on the deal, which they did. And then we sold it to a new partnership that we set up and left meat on the bone for that new partnership. And we actually recorded a movie on that one. Is that online at all? Yes. It is? Okay, so it's online. We can get you the link for that. We actually recorded it because I said that I could, in 30 days, create $1 million in value. And we went in there and rehabbed the whole thing very fast, because the first one time we didn't really do a big rehab. Rehabbed the whole property, did all that, filmed it, so you can see all of that. And it's really interesting. Even though we had been managing it and taking care of it, it was still had a lot of problems and a lot of interesting characters we had to get rid of to clean up the property. But then, so we recapitalized that and bought it with a new partnership and increased the value, refinanced, pulled the cash out of that, and have been holding on to it. Well, now it's in a position again that, because it was built in 1971, and it's the first property as you're going into Saginaw, this one needs $20,000 a door rehab. So we can turn around and sell the property right now and just put it on the open market and go ahead and sell it. But I thought, well, let's just pay a fair price for it. And so we're going to pay $8.2 million for the property, which is $82,000 a door. But we have to put $20,000 a door into it, which is all new cabinets, countertops, appliances, fixtures, everything to go ahead and really dress that up because it's 71 build, and also do some stuff on the exterior to dress up the exterior. When we do that, we're going to be increasing the value of the property. So just to give you an idea, there's a property we made an offer on. I think I could say it's Spring Valley. And Spring Valley is over in Euless, built in 1971, two-pipe system. This one's got individual air conditioners. Still all bills paid. But it rolled out at $16 million whisper price, and it's being bid up to probably over $17 million. So we're not going to be a player on that particular deal, but it's 1971. And we calculated that we would be all in on that one at $130,000 a door if we liked it. We're going to be all in at this at something like 106. Okay, so as far as the price, so we're going to rebuy this one. So this is our next capital raise that we're going to be doing, and the next property we're going to buy. We're going to roll that out next week. Our projected returns right now are between 16% and 19%, and that's all based on whatever loan we go with. We're still shopping our debt, so I can't roll it out yet until we narrow that part down. But it'll be at least a 16% per year average return on our projected numbers, and probably higher. So we've got like between $2 and $4.7 million capital raise. That's $2 million if we go with a high leverage bridge loan, or 4.7 if we go with a Freddie Mac low leverage, low interest loan. So we don't know where we're going to pan out yet there. We've got a couple other loan options. So we're doing all that. So that one will roll out next week, and it's not accredited only. So everybody can be involved in that one. Who missed out on Frankfurt because they're not accredited? Okay, a few people in here. Well, this will be the next one. It'll still be a great deal. Next up. All right, we've got something fun we're doing. Okay, anybody heard of George Ross? Yeah, George Ross, he, if you remember The Apprentice, he was also the executive vice president for Trump Organization. He's a lawyer. He's got great stories. He's, I don't know, 80, 90 years old. He's up there. And he'll be coming to speak here along with J.T. Fox, #1 wealth coach. And Hugh Hilton is also going to be speaking. We also have some other guests coming. And this will be May 22nd and 23rd for a Passive Wealth Summit. And this is primarily going to be a J.T. Fox event. We're just hosting it and be able to spend some stage time with him. But they're going to be talking about it because Hugh Hilton, he's done like $10 billion in transactions. Okay, so he is a major player. And if anybody's read any of George Ross's books, a lot of them, he'll talk about all the deals that Trump did and how they did it and how they got those done. And that's a lot of fun. So that'll be May 22nd and 23rd. And it's going to be here. And because we have limited seating and we got to make sure that anybody that's coming actually shows up, we are doing a $100 seat deposit, which you get back, you know, at the end of the weekend when you come on over for that. So it costs $0. So, but it's a $100 seat deposit, but you get that back just to make sure that we're not taking up space that people don't show up for. All right, next up. Q&A. Okay, open mic time. Who's going to rap? Who's going to sing? Yes, sir.
Do you have updates on the existing portfolio?
A what? Updates on the existing portfolio.
I'd be glad to give you any updates. I mean, I don't want to we have 20 properties now as of Friday, 22 properties, sorry, as of Friday. So if you want to stay after, I'll give you an update on any specific property that you want. The only thing that applies to all that I could share with you, Nikolai, is that there's something out there called COVID that we've all been dealing with for a long time, and I'm sorry. And delinquencies, I do have some good news for you on that front. I'm not going to give you a figure yet, but we've been very successful. The state may be watching me, so they have been very good to work with, and it's such an easy process, like all governmental programs. But we're substantial. We're going to have substantial returns for the properties that had delinquency issues during COVID, and I'll be glad to share some really good information. As you know, you get a monthly update at the end of each month on all the properties. I feel like by the end of this month, we'll be absolutely able to share some figures with you on the dollars that we've been able to recuperate. And again, these are dollars that the property's been carrying in total delinquency for a long time, because as you know, we could not. There's a thing called eviction moratorium. Then there's a thing called a CDC protection, and it's gone back and forth in the court. But anyway, that we could not evict people for non-payment of rent. So that's been a little challenging. You as investors understand that, but we have good news coming at the end of May in regards to a lot of those properties. But I'll be glad to give you anything specific about any property if you want to stay after, Nikolai. Let me give you, if you don't mind, Nelson, let me give you a mic. So everybody that is being recorded can hear it as well.
Hey, could you?
It doesn't matter. It's recorded.
Okay. Hey, can you explain accredited?
Explain
non-accredited?
accredited. Okay. In a nutshell, somebody is an accredited investor if they've got $1 million net worth, not including their primary residence and not including IRA funds. Because they want to know that basically what the SEC does is they said, okay, if you're going to advertise to get investors, we're going to put additional protections in here so that you're not out there taking advantage of people. So if you're going to advertise an investment, you have to be accredited to actually be able to invest in that particular opportunity. That's to keep the scam artists away from taking your money. And to be accredited, that says, hey, you're sophisticated enough, you know enough about everything to invest your money where you want to, and so we don't have to worry about you because you're accredited, you've got $1 million net worth. And it's either net worth of $1 million, not including your home or IRAs, or if you're single, $200,000 per year, 3 out of the last 5, or married, $300,000 income, 3 out of the last 5 years. So either or, and the way that we do that is we actually have to have something to verify that somebody's accredited. So if you have a CPA, I think a lawyer can do it also, to go out and just write a letter saying that you're accredited, and that's all we need, is to be able to have some third party say you're accredited. If not, we do have a online source that can do that also.
That annual income is gross rental income. So if you have any rental properties, it's not what your net rental is. It's actually you add up all the rent you get.
Okay, so income can include, because you don't have a mic, income can include your gross rents on your properties if you have other properties. So not net rental, gross rental. So you have a fourplex that you've got rented for $1,000 per unit. So that's $4,000 a month. There's an extra $48,000 to add on to it. Okay, so that's on the income side. Okay, you cannot count the equity of your primary residence, but you do have to subtract out the debt that you have on your primary residence out of that. So yeah, it's a little confusing, but bottom line is if you have a CPA, go ahead and just ask your CPA to say whether you're accredited and write a letter on that, and that's the easiest way to go. Well,
Darwin, I had a question and wanted to know, and I'll be glad to give them an example, but I'm sure you can too. But somebody asked me earlier, how do you decide who we're going to take? And Julian, you may jump in here too. How do you decide who you're going to take as an investor? Will we take anybody that comes in and says, hey, I want to write a check?
First off, no. It also depends. If we're like Frankfurt Station, we did that as a 506C, meaning we needed to have accredited only. But that allowed us to advertise that particular investment. Because we were raising $8.5 million, and we didn't know if we could do it all in our group with just our current investors as an accredited deal, we decided we wanted to advertise and use that, because that's our outreach, is to be able to advertise a particular opportunity. So we wanted to use that opportunity on that one to get other accredited investors. And how many total investors do we have on that one? 92 total investors for $8.5 million. And on the flip side also is we have some people that Jeremy referred to as OTI, off the island, voted off the island, because there are some investors that we say, you know what, we just don't want that headache involved anymore. So let's dissuade them from investing with us, because again, we've got how many total partners? Over 500 partners right now. So 500 investors. Now, like Anand and Ben were talking about, the responsibility of that is huge, absolutely huge. And I take every phone call extremely personal. So if there's somebody that's complaining about somebody that's unhappy about something, that weighs heavily on me. Because we make projections, and they are only projections. We're not in there, we don't have the property, we can only do it on projections. We don't know that COVID's going to come in, or that a particular market is not going to do as well as we projected. We try and be very conservative, but when we're not hitting those numbers, it weighs on the whole team. I know with me very, very heavily, because this is a lot of money we've raised. How much money have we raised total?
In the last 12 months?
Well, in the last 12 months, close to $40 million. So, I mean, just in the last 12 months. So that's a huge responsibility that we don't take lightly.
And Darwin, I think it's important to also emphasize we will not take someone, not because they may be a pain, but we also put them, just about everyone, through a survey and find out what their financial position is. So if someone only has $50,000, $60,000 to their name, we don't feel that it is right to bring them into what is potentially a risky investment and invest the last few dollars they have, or maybe all the dollars they have, to their name. So.
Well, and that's actually an SEC guideline also. Yeah. That's why there's that long questionnaire everybody fills out to show their experience and net worth. And there was one lady, and I think she was a truck driver, and she had inherited some money, and it was only like $50,000, but she wanted to invest it, but her net worth was $50,000. And these are illiquid investments, meaning there's not a marketplace to immediately cash it in to get your cash back. So SEC would say, look, that's irresponsible of you to take their investment, so don't take that, because she can't afford to lose it. So it's usually, maybe 10% of net worth is what we like to have in any one deal. And we also like to have people spread out investments over numerous deals, because it's not one giant fund. We're in Texas, so I like the oil, drilling oil wells example. You want to invest in numerous oil wells rather than just one, because if that one doesn't hit, you want to make sure you're spread out over numerous deals. So we like to spread that out over numerous transactions. Yes, ma'am. Speaking of funds, is Tahoe still a fund? Yes, Tahoe is still a fund. We've closed 2 of the properties, and we've been remodeling them and doubling the rents on those units that we're buying up there. Now, when we started our business model on Lake Tahoe, is we were paying $100,000 a door, putting $50,000 a door into them, and then they're worth $200,000 a door. Well, it's gone from a buyer's market to a seller's market there, so it's going to be harder to find those deals. But that is still a fund, so you invest in that one, it's going to be for every deal that we buy in that fund. And we've also got a different structure on that one as far as having a preferred return and catch-up provisions. That's a little bit too much detail. Talk to Garrett, Jeremy, and Julian if you want more information on how that one's structured. Yes, sir.
When you're estimating your net worth for the purposes of becoming accredited, do you include the amount you invested in one of your properties, or the amount that you think the property is worth at the current time?
When you're investing so when you're estimating your net worth, do you estimate the value that you put into it or what you think it's worth now? I estimate the value that I think it's worth now. However, if you were to send in paperwork to us, because we have to do this every year for the IRAs, and you send up and say, what is the value of your investment? We always only put the amount of money that you invested, rather than what we think the value of your share of the property would be, because we don't want to make too many representations on what that value is, because if it's going to go up and down, preferably only up, but it'll fluctuate depending on what the market's doing, and we don't want to give any false hopes on anything. So we always just say what it is. But if you're making your own representations on what you think it's worth, then you can do that, and that's a discussion with you and your CPA. What else? Anything online, Jeremy? Okay, I'm not seeing.
Darwin, are deals still hard to come by?
Are deals still hard to come by?
Crazy offers coming in from California.
Yes, they absolutely. Yeah, deals are hard to find and getting harder. 3 out of the last 4 deals we did this year were all off market. And because if it goes to market, there's a lot of people chasing deals. A lot of stupid money chasing deals, especially now when they're talking about getting rid of the 1031 exchange. I literally, this is not an exaggeration, at least 5 times a day, I get a phone call or email or text that says, hey, I'm interested in buying your property. We've got and I've called some of them back. As a matter of fact, we've been through the, I'm now not calling them back, let's put it that way, because so many of them are just they say they have a client with $1 million or $10 million, whatever it is, and they're all full of crap. And they're all people that are just out there bird dogging, trying to find a deal, which I highly encourage everybody to do. If you find an off-market deal, you've got something of value there. So if you find something that's for sale that's not on the market, there's a good chance it's going to be a good opportunity, and that's what everybody's looking for. Because if it's on the market, everybody knows about it, then it's just a bidding war. And the only way that we can have that make sense in a bidding situation like that is to really drill down and say, what can we do to actually add value? What can we do? Rather than what the market is or anything else, what can we do to add value? And that's what we have to really analyze to say, okay, how much can we push rents? Where can we add this? Can we lower expenses? What can we do to really refine to get this deal to work? Because if not, then we're going to be priced out of it, just like Spring Valley that I was just talking about. Up at 17 million doesn't make sense for me. There's tons of properties. And I might only be beat out by $100,000, but at some point in time, I'm saying, okay, even though there's a $100,000 difference, there was a $15 million? It was about $15 million deal, and if I would have went up just another $100,000, I probably could have got it. And you know how easy it would be to bury that $100,000 in the deal somewhere, and so that would adjust it. Rather than 16%, it's 15.7 or something along those lines. But at that point, I've squeezed everywhere I'm comfortable squeezing, and I just can't do anymore. And the broker's job is to get the most money. So if they can get you to come up an extra $100,000, $200,000, they're supposed to do it.
So to follow that up, do you have anything lined up after Frankfurt?
Do we have anything lined up after Frankfurt? Well, we're going to do Saginaw Crossing, which is we're rebuying that from ourselves. And we're still looking at everything. We made an offer on Spring Valley, but we're going to be priced out of that one. And we're always looking for everything. There was another property that's an off-market deal, but the seller is saying, no, we want to go full marketing. We want to get the highest price we can. So I'm like, okay, well, I'm probably going to be out. Yeah, so it's really a game of hide and seek. You got to go out, you got to find those best deals, and it is tough. It is real tough.
Darwin, I also wanted to add, excuse me, it's not just about the price of these assets, and truly they have gone up to levels that I've never seen. But once it's like that having the tiger by the tail. Once you've captured that property, or once you've seen a property that may work price-wise, it's the operations that really are going to make this deal a deal. And if you've been watching the news anywhere, unless you're living under a rock, you've been hearing the word inflation. Inflation is everywhere, and no one can see it more than this guy right here. Talk to us very briefly about where you're seeing our expenses going, whether it's insurance, whether it's materials, whether payroll, anything.
Well, really good point, Julian, and obviously something that we have to pay very close attention to. We had a discussion, I forget who I was talking to, in fact, I was talking to Ben. Ben and I are refining the CapEx budget for village condos. And just even since we bought that property, we've seen some tremendous increases in lumber, flooring, getting messages from the vendor saying, hey, I'm going to have to pass this along. So to Julian's point, it's just, you got to do your due diligence. And as Ben knows, we actually went back and rebid much of the work that we already had approved just so we could get some lower prices. But it's supplies across the board. It's property taxes, as we all know. Some counties are worse than others, or more aggressive than others, I should say.
Insurance.
We already had kind of an iffy insurance market before the winter storm, but you can imagine what the fallout of some of that's probably going to add to the mix. But the bottom line is, to Julian's point, it's just a matter of you got to pay very close attention, you got to monitor it, and you got to do the best you can. And sometimes that means you're adjusting from what you originally thought you were going to do at that property to keep it in line. We want to make sure that the returns are what you're expecting. So sometimes we're adjusting that to make up for that. So thank you, Julian.
You know what? Let me talk about inflation real quick. I did some studying on that today. If you go back to how it was calculated back in the 80s, then we would be year over year right now over 10% inflation. Okay? They're estimating this year 23% real inflation. Okay, so 23% real inflation, and inflation is technically the devaluing of the dollar. So if you have money sitting in a bank account, that's losing 2% per month. That's serious. So you need to get into some hard assets, and of course my favorite's real estate, but get in some hard assets also, because that 23%, you're already seeing it on gas, lumber, produce, everything, and it's going to get worse. And some are even saying hyperinflation, and that would be scary. Yes, sir.
What does that do to the value of your debt?
What does that value do to the value of your debt? That was a loaded question, wasn't it? That was teeing it up. Well, if you have 20% inflation, let's just say, and you've got a $100,000 loan, you're paying that back with $80,000 worth of dollars. So basically you're shorting the dollar. So we're getting, on Frankfurt, we're getting a $32 million loan. So if inflation kicks in, we're paying that back with dollars worth less. Or if you want to look at the value of the property going up, our appraisal on that was, how much was our appraisal? 43? Okay, we're paying $37 million. We'll be all in at 39 or so, and our appraisal came in at 43. So we're already going to be popping that by 10% as far as the overall value, but that's 50%. $4 million pop on $8.5 million, almost 50% increase in equity just in that one property, and that doesn't include any inflation. If inflation is 20%, then our $40 million property is going to go to $50 million, well, $48 million, and paying it back with dollars that are worth much less. So inflation is great for real estate. Anybody invested in the 70s? Anybody remember the 70s? But that's the opportunity there. What else?
So, Darwin, how does it affect the cap rate, the inflation cap rate? And
How does
the
inflation
property value?
encompass? Okay. This gets into a very deep conversation, and I am not well enough versed to be able to explain it because I do the same thing. I'll tell you what my plebeian brain says. Okay, there's inflation, so prices of everything are going up because the value of the dollar is going down. Income has to go, first off, expenses are going to go up, but income's going to go up also. Hopefully income goes up faster than expenses, which is a nice reason to be in apartments, by the way. In an inflation period when rents are going up, you want shorter term leases so that you can turn those over faster rather than an office building where you're locked in on those. But then inflation happens, so the values go up, hopefully faster than the expenses. But then they hedge they try and combat inflation by raising interest rates so that they can charge more on interest so that they can take the money out of circulation, because inflation happens when there's too much money in circulation, so they raise the rates, and then they take that money out and basically take it out of circulation to try and combat it. But if interest rates go up, that would mean the spread between, still need to have a spread between that and the cap rate. So if interest rates go up, then cap rates should go up. If cap rates go up, then values go down. But that's not how it actually works. So like I said, I start talking myself in circles. And so all I know at the end of the day is that inflation is good for real estate, bad for everything else. Well, I mean, gold and things like that, hard assets. But inflation overall is bad for everybody, but it's good for real estate. And like I said, I'm talking myself in circles on that, so I apologize. I'm not sharp enough to explain that. If anybody else has a better explanation, I'd love to hear it. What else? Anything else? Hold on a second. Yes, sir.
So as inflation happens, the demand for real estate as an asset class increases, which I think would drive cap rates down. So while there's pressure on cap rates to go up, I think the demand on multifamily as an asset class goes up, which pushes cap rates back down. So I think those two even out.
Okay, good. The youngest person in the room has the explanation for. That's your guess. Okay. Couple of questions. Have any insurance claims been paid from the winter storms yet?
No insurance claims have been paid yet. The adjusters, believe it or not, how far are we after the winter storm? Almost 3 months now. The adjusters are just getting to the properties this week. Having said that, the good news is the insurance companies let us know right up front, we're going to be behind. Do not wait on us. Take care of your residents. Fix what you got to fix. Take pictures. Take video. Keep receipts. Document everything. We'll eventually get to you. So they're really just now getting on the properties this week.
And also the rental assistance is coming through.
Yes, I talked about that a little while ago about rental assistance. We'll have some really good news. I can actually share some figures with you at the end of May. I know what we've been approved for, but I'm a little bit reluctant anytime I'm dealing with the government to say it's approved, but you haven't gotten the check yet. I'd like to get the check before I tell you that. So.
It's substantial, though. Yes. We'll tell you that. Let's see here. Also on one of the other questions online, village condos. How long before we'll be doing distributions on that, Ben?
Me and Brian are looking at all the financials.
Here's the whole thing. Now, again, Ben works a full-time job, and he's the co-sponsor on that one, heading that up. So we're kind of throwing him to the wolves here on answering a question on the spot. So let's see what he's picked up and working with Brian.
So we're looking closely through all the financials and looking at our CapEx budget and trying to determine where we're at right now. We're not, like, our income has been pretty good as far as there's not too many people that aren't paying due to COVID. So that was one thing that we wanted to look at as we took over, as what the previous owner told us everything looked good. We've confirmed that's been the case, that delinquency is pretty low. But yeah, overall, just kind of looking at where we feel comfortable, and then we'll make the decision at that time.
So
anything
you're still
you wanna
waiting.
add to
Now,
that?
how are rents doing compared to projections?
The 3 units we've leased so far, we leased over the pro forma rents, and those were done by our maintenance guy on site, so not the general contractor, which is a huge plus because that will reduce the cost a bit, and just nice that we have a maintenance person that has that skill set, and we may have even maybe slightly higher level finish, which would rent for even higher with the other units. So
Okay, so I don't know if you heard that online or not, but rents on the 3 units they've turned since they've got it are actually higher than projections, and those are done in-house, not the high-end stuff we're planning on doing, but they are still being done very, very good because we've got a really good on-site staff. So just repeating that just in case. Let's see here. That's all I have. Anybody else?
Is the material price going up? Are you planning to focus on buying newer property with lighter rehab now?
Okay, with prices, especially on materials going up, are we going to look at newer properties? We've been adjusting and pivoting to nicer, newer properties anyway over the last year, because it used to be that the returns for a C quality property were much higher than an A quality property. But because there's so many people chasing so many deals, those returns have become so tight that it's better to buy the nicer quality asset, which is less risk, less maintenance problems, better clientele. All of those things make those a more attractive investment. So we haven't pivoted based on prices of materials, but we were pivoting earlier because of that compression. Yes, sir.
Darwin, I'm one of your newer investors, so pardon this question. I see a pattern where you are investing in multi-housing rental properties, right? Apartment communities. How is this comparing to like agriculture lands or, a small strip mall development and things like that? Any thoughts on that?
Okay, how do apartments compare to land, strip malls, office buildings,
storage spots,
all the other property types? The only one that I would say is competitively similar is self-storage. And that would be the only one that I would say is competitively similar. No matter what you're investing in a stream of cash flows. Okay, so when you're looking at an investment, you're not looking at, yes, you'll look at the quality of the asset just to know what the underlying asset is, but you're investing in a stream of cash flows. That's why when I do my presentations, I say, these are the expected cash flows you can expect. It's similar in different asset classes. Now, right now, big money is pivoting away from hospitality. Hotels got slammed. Office buildings are getting slammed. But there's always going to be a need for homes. People always need a place to live. And so that's why we decide to focus on apartments, because it's the most stable. Also, in an office building, for example, if we have a new tenant move in, we might have to spend 6 to 8 months of the anticipated rent to pay commissions, tenant improvements, everything else. So it's a losing proposition unless they stay longer than 8 months. Whereas in an apartment, all we're doing is paint, carpet, fix it up, and release it. We don't have to have any problems. Also, on apartments, we have an on-site staff that takes care of most of the day-to-day operations, whereas in an office building, you don't have that. In retail, in industrial, triple net lease properties. For example, if you go out there and look, you can buy a Starbucks building, you can buy a Whataburger building, you can buy any one of those. Those are triple net leases, which you buy it, and triple net basically is the tenant pays for everything. So you don't have to do anything. You just get a check in the mail. But because of that, the yields are extremely, extremely low because you've got a credit tenant, Starbucks or Cane's or In-N-Out or any one of those. Walgreens, CVS, Dollar General. All of those are triple net leases that you can do. But the yield is too low. There's not a lot of upside. In apartments, I'm going to compare apartments and homes real quick. If you're investing in houses, basically your house is only going to be worth what the other similar comp sales are worth. in investment properties like apartments, they're worth the income they produce because you're selling a stream of cash flows. So if you can increase the income, it increases the value of the property. And there's a huge amount of disparity you can have from somebody that, give you an example, my grandparents owned some small apartments. My grandmother lived there, and she wanted easy. Okay, she had all of her friends live there. Everybody that lived there was an old lady, and it was nice and simple and easy for her to manage. And she kept her rents very, very low because she wanted ease of management. Whereas when we ended up selling that, the people that came in and bought it said, "Man, we can raise the rents $300 or $400 a unit, and in doing that, and take the value from here to here. So we're selling it here, but by raising the rents, it's now worth this." So it is a business. So almost like a hotel is a business. Yes, you've got real estate underlying it, but like an apartment, you've got real estate underlying it, but you still have a business you have to operate out of it. So that's some of just a little bit of information on a couple different types. Okay. No problem.
Great questions. Great questions.
That it?
You passed the Madera Residential Cedar Clean?
What was that?
Madera Residential recently sold his Cedar Clean, 218 units in South Dallas.
Who did?
Madera Residential.
Madera, Cedar Creek.
Cedar Clean.
Cedar Glen. Cedar Glen sold their, Madera sold that.
Yeah. You passed it, or you just don't like it?
We actually bought Cedar Glen Apartments in 1992. Well, no, we didn't sell to them, but we bought that in 92, Cedar Glen Apartments in Duncanville. And that came on the market. Well, actually, it didn't really come on the market. Madera owned it, and they sold it off market. And we did buy the corners from Madera off market. And we had the opportunity to buy Eagles Point, Stonegate, and Wooded Creek, and we passed on all those. The numbers didn't meet our the level that we wanted on that. Passed on Cedar Glen also, yes. Yep. Like I said, we look at just about everything, but we try and give enough cushion in there that it prices us out a lot of times. And here's the little thing. If you invested in 2012, 13, 14, 15, you couldn't make a mistake. It didn't matter what you bought. It was a home run. But in those times, I was still trying to be conservative on those properties, and because of it, I got priced out then too. But I'd rather be conservative on what we're buying and not risk investors' money than be aggressive and risk their money unnecessarily. Yes, sir. More, okay. Yes, sir, Nikolai.
Yeah, is there any advantage or disadvantage in buying a large portfolio like 1,000+ units? Some people are buying, I don't know, in Houston, in Dallas, 1,000+, 2,000+ units.
Is there any benefit in buying a large portfolio, 1,000 to the... What's funny is it gets spun both ways. So they'll say, yeah, you buy 1,000 units. You buy this 10-unit portfolio, and from a buy side, we think we should get a deal. The seller says, oh, no, you should pay a premium because you're getting all these at one time. So, it goes both ways, and it still gets down to the underwriting on whether or not it's good. But a lot of times you'll get a lot of crap in there with the good properties. You'll get good properties and bad properties. And you'll say, yeah, this one makes sense, this one doesn't, this one makes sense, this one doesn't. And they'll say, nope, you got to take the good with the bad. Okay. Another question. Does Silver Creek have any possibility of distributions in the future? I'm going to say Silver Creek's one that's not performing to the level that we like. However, what are our collections this month? $318,000 in collections this month. What was the previous high?
306.
306. Okay, and this is without the extra money we're getting from COVID relief. So Silver Creek is it's stable, it's decent, but it's not doing any distributions. We're very disappointed in that one. The investment is still solid. Everybody's still safe in it. And we're now getting that income up higher. We had to change our business model on that. Just like I said, we have to adjust all the time. And on that particular property, we were doing the upgrades, but we weren't getting the rents that we needed for that. So we stopped doing the higher level because we were basically over improving for what the residents in that one little pocket would pay. And so now we've had to adjust that. So we're spending less on our CapEx, still getting better rents. And like I said, this has been 306. That was a year ago?
Just probably right before COVID.
So 306 was our high before COVID, and then that went down and dipped down to 280s.
Yeah, 282 was the low, I think.
282 was the low, but now we're back at 318. So we're now kicking butt over there, and new attitude, and a lot of things going on that one. All right. I think we're finished up here, so let's go ahead and...
Okay, if you don't
move on.
mind, I'm going to back up a couple of slides just because I didn't get to say it, but who here is in Frankfurt? Congratulations! We close on Friday. We're looking forward to it. I'm going to say it again. Who's in Villa Creek? Okay, I can't say it loud enough, but you can look at the returns. Darwin talked to you a little bit about. I mean, it's estimated that if you're in Villa Creek, you probably got about half your money back already. And then you can turn around on the board and see what your check's about to be. So again, I just want to say huge congratulations to those in those properties because that's nothing but great news. Having said that, please, any of you know who Jeremy Wolcott is? Oh yeah, okay. Well, here's some good. Just some news. We will have our June meeting here on June the 8th, second Tuesday of the month. And guess who's going to make a special appearance? Jeremy's going to be here and make a special appearance. So if you want to come see Jeremy a little bit early. We're looking forward to seeing him. But
Tell a little bit more about Jeremy. Who doesn't know Jeremy? Yeah. Okay. Jeremy's one that started with us when I started going through this. I met Jeremy at an event, and the very first deal, he said, I want to participate. Yeah, sure, on all this. And I said, I'm going to go look at a property. Let's go out there and take a look at that. So Jeremy and I went out to this property. We met with the broker. Julian was there, met with the broker. We walked the property. It was really pretty. And I said, are you ready to do something? And he's like, yes. I said, okay, we can get this deal at this price. We did a back of the napkin, literally on a napkin. You know, this is what we think that the value is. This is what we can do with it. And I said, okay, we got to put up $100,000 non-refundable right now to do it. Are you in? And Jeremy said, yes, I'm in. I'll put up the 50 grand. Didn't talk to his wife. Didn't do anything else, but he said, yes, I'll go for it. And so I liked his dedication on that. And so what he did is he started the investor relations team for us. And on the early years, he was the main guy doing it. Okay, so he had a financial background. He was with Pizza Hut on the financing of the franchises, things like that. He's got a financing degree, so very, very sharp guy. But he was now a stay-at-home dad, and so he got to go out there and meet with everybody, and he was meeting with all the investors, and that's how we raised our money at the very beginning, was him going out there and meeting with everybody. And Jeremy is an absolutely great guy, very outgoing, and he invested in every single deal we did, and he raised money for most of those deals. Now, his wife, very, very powerful, high-profile woman in big business, and of course, she wanted to stop doing what she was doing. She was traveling at least 3 weeks out of the month. And so he said, my goal is to get her to quit her job. So he invested in deals. He got a little piece of it for raising the money and being investor relations. And he more than 10x'd his money, his investment over, I don't remember how many years, 5 or 6 years.
About 5 years.
About 5 years. 10x'd his money, retired his wife, and they moved to Mexico, and they bought some land on the beach. They're not there. They're actually inland a little bit. But he basically moved to Mexico to retire, and he's living the life with his 2 little girls. And, of course, he'll extol all the benefits of living in Mexico and how cheap it is to live there. But, and he's listening in right now. But he is designed his life the way that he wants to and hit that goal by investing in real estate. And so he's going to have a good story to tell on what he did, how he did it. I'm sure he'll have some early story days and for how he got to where he is, which is sitting in Mexico online right now, and still communicating with partners and still involved. So that's going to be very, very fun and exciting to have him in here and let him tell a story. Jeremy, just so that you know, I'm looking around the room and I'm seeing some very big smiles on a lot of people's faces that are looking forward to seeing you again. So that's going to be a lot of fun. The ticket is booked. He'll be here. All right, good. Yes, sir. Okay, say a few words about my brother. Now, my brother annoys the crap out of me. My younger brother, everything he touches turns to gold, okay? Even accidental stuff. But he works his butt off, but he's got a great story, and it's actually online. He took $20,000 and over 20 years turned it into a $20 million portfolio. And he only did 20 deals. And it was 1031 exchange, one to the other, to the other, to the other, to the other. And 100% of his investments have been, in the last 7 years, have been in Lake Tahoe. And he loves it there. Our family traveled there all the time, so he wanted to invest there, and he did. He had a hotel that he had there. He's had numerous properties. But he's our operating partner in buying the apartments that we're doing in Lake Tahoe. So he's up there. He spends a week a month up there, and he actually gets out there, and Garrett went with him to go up there and do demo. He's actually physically working on the units himself also. But he's the one that's finding the deals, analyzing them. Then I'm double checking all of them, and that's what we're buying in our fund for Lake Tahoe. But he's got a great story. Go online and look at his. Again, he started when he was, about 26 years old maybe. And in 20 years, took $20,000. His first 2 deals were lease options on 2 condos and parlayed that into a $20 million portfolio. And he lives a very, very good life, and all because of real estate and keeping on turning those. So that's something you definitely want to watch. Do I think this will be the end of 1031? I doubt it. I know Biden wants to pass that, but there's too many real estate investors that are in Congress to want to get rid of that loophole. So I'm hoping on the fact that they don't. But again,
Next Tuesday, Marcus Miller Chap have podcast talking about
the subject's the end of 1031 on Marcus and Millichap's next month. Well, we'll see. He can, growing up, we had a picture on the wall. Actually, it was in the bathroom. And it was a sailboat. It said, you can't adjust the wind, but you can adjust the sails. So it doesn't matter what happens, whatever laws they change, whatever they do, real estate is still, in my opinion, the absolute best place to invest. And it always will be. We'll just have to adjust to what we're doing and adjust to the market, but it's always creating value. And it's the number one wealth builder of millionaires across the world. So it might change and it might hurt, but we'll still keep on making money for it. So, all right, Brian, finish
All
up.
great questions. Thank you very much for coming and joining us tonight. If you have any questions, we'd love for you to hang out for a while. Garrett will be here, Darwin's here, Julian, myself. Talk to Ben, talk to Anand about their experiences. And again, June 8th is our next meeting at which Jeremy will make an appearance. We're looking forward to seeing you, Jeremy. Again, we know you have a choice. We appreciate you being here, and we always appreciate your trust All of us take it very, very seriously when you're putting your money in our hands, and I think you know that about us, but we take that very, very seriously. So thank you again for coming out. Looking forward to see you next month.